Hey guys, welcome back to the channel. So the question is Donald Trump gonna tank the economy? Is he gonna tank the stock market? Are you gonna lose all your investments? Should you get out of the stock market right now and maybe go into cash or into bonds and kind of wait for this situation to clear up before you get back in? And my answer to that is gonna be no. So I know that this day and age, there's a lot of stuff to worry about. You know, the market, S&P 500 is down. We're in correction territory, right? We're down 10% from its high of 6144. We're in March of 2025. Elon Musk threatens to, lay off many thousands of federal workers. There's a lot of people that are worried about their jobs right now. The tech sector has been doing really bad lately. Gold is on its way up to all-time highs right now at about 3,000 per ounce. Trump is having a tariff war with his buddies, Mexico and Canada. But anyways, for the people out there that are invested in a well-diversified stock portfolio, should you get out right now and be in something more safe while this situation kind of clears up and all the volatility subsides? And I'm going to say no to that. The reason I'm going to say no is that short-term volatility, I liken it to turbulence on an airplane ride. So if as an example, if you're investing right now and your time horizon is you want to be invested for the next 10, 20, 30 years or longer because you want to be able to have purchasing power in retirement, then you shouldn't worry about the short-term volatility. Let's see what the charts tell us about long-term investing. So this is a year-to-date chart of the S&P 500. The S&P 500 being the 500 biggest stocks of the United States. That's what this index is tracking. And so far, you can see the chart from left to right, it's down. It's not doing good this year. The market is not up for this year. If we zoom out a little bit and look at the last year, we can see that the chart is up. If we start down here at a level of 51.17, right now the index is at 56.38. So it is up. It's not up by a lot, but it is up. If you would have been an investor a year ago, you'd be up by now. But things are looking rather scary. The last 6 months in this index have been really flat. So for the last 6 months, we can say that the S&P 500, the stock market, has really done nothing. It's kind of just stayed flat. But let's talk to those investors that are embarking on a long-term journey right now, on a long-term flight. You just boarded and I know this is a bad time to be talking about flights and with all the plane crashes and stuff, but bear with me here. Let's say you're on a long-term flight to your retirement, and you're 30 years old. I'm even speaking to you if you're 60 years old, okay? So you have your money, you're investing for the long term. Let's look at the stock market and what it's done over the last 30 years. So you say something like, hey, yeah, that's great and all to be invested for the next 10, 20, 30 years, but are we even going to be here in the next 10, 20, 30 years with the way things are happening right now? At any time, Russia, China, they can launch a nuke at us and, wipe us out. We can go into some kind of real war with our actual partners, Canada and Mexico, and things can go, to hell in the handbasket real quick. But I want to, even though I don't know what the next year, let alone the next 30 years brings for you, I still want to encourage you to stay invested in the stock market. The reason being, let's work backwards on this one, guys. Take that hypothetical person that retired 30 years ago. So let's go back to 1995. This person let's say this person is 30 years old, and let's say this person who's 60 years old in 1995. They're just starting their retirement, right? So they have their money in the stock market in 1995, and they think, well, I don't know what's going to happen in the next 30 years, but I don't want to lose my money. So what ends up happening in their first few years of retirement for these people in 1995. So the market goes up. The 90s are a good time for the stock market. The internet is invented. A lot of technology companies out there, Amazon, Google, Yahoo, they're all founded as well. At the turn of the millennium in 2000, a couple things happened that make this person who retired in 1995, really doubt whether they're going to have enough money left in retirement. The first one being the dot-com bubble and subsequent stock market crash. So that was a really big stock market crash that happened in 2000. All the tech companies that came out, they weren't making any money. They were just coming out on the stock market. And people with money were just like, hey, I don't give a crap if this company's making money or not. If it has .com in the name, I need to buy it. I need to be part of this internet revolution. Everything is going to be different now. And so they bought in. The stock market crashed, and the market went down, subsequently. Another thing that ended up happening in 2001, September, was 9/11. So 9/11 happened. That really was a wake-up call for America and kind of the rest of the world there that, hey, we're not as safe as we think we are. We can't just take our freedom for granted. And so I remember being in high school when that happened. I was in my sophomore year of high school. I remember that morning, and we all went home early that day. Nonetheless, the person that retired in 1995, just 6 years later, now they have to worry about is the global war on terror, and is terrorism going to be, is there going to be some kind of war here that is going to, eat away all my stock market gains? And so it was a really scary time during the early 2000s when we thought that terrorism was going to be everywhere. There was the threat of anthrax. Anthrax was getting mailed to people. London, I think, got bombed by Al Qaeda, and then so did Spain. They got bombed by Al Qaeda in the 2000s as well. If I'm recalling correctly, in 2003 there was another recession there. A pretty quick one where the market did fall again. After that, the person that retired in 95, they continued. If they stayed invested, then they'd be pretty scared by now because, their money hit a high of around 2000. In the year 2000, they hit a high, but then a few years later, they're still not even back to even. So this person that retired in 1995, once they just about broke even in 2006, 2007, well, you can guess what happened there. The global recession that at the time everyone thought that the global banking system was going to collapse, and maybe it was if it hadn't been for some of the higher institutions that came in and bailed some banks out and things like that. It really did look there like the world was going to end. There wasn't any jobs for anyone. It was a really tough time to be invested, but that person that retired in 1995 has been through about 15 years there of pure turbulence there. So there, you can imagine that someone that retired in 1995, 15 years into their retirement, they've already experienced a dot-com crash, a war on terror, and a global recession. So really a really scary outlook. But I want to give you some hope here. If that person had stayed invested, then they would have, seen the stock market come back. They would have broke even about 3 years later. And then after that, they would have seen many gains. Depending on your view of the world and maybe what political party you belong to, that maybe 2016, when Donald Trump got elected, was a time of a lot of hope for you, or a time where you thought that all hell was going to break loose. But either way, Donald Trump was president from 2016 to 2020. He did, I know a lot of people forget about this, but he did wage a tariff war with Canada, Mexico, and China. So it was a lot of the same things that are happening this day and age. And so he made it through his presidency all the way to 2020. The market is up. This person that, retired in 1995, they've been through what? 15, 25 years of retirement. So if they were 60 and they stayed invested all this time, then they would be 85 years old in 2020. That 30-year-old that decided to invest in the stock market in 1995 Well, they would be what, 55 years old at that point. So, check my math. But even though they went through some scary times and a lot of difficult situations, their money would be up, as you can see on this chart. Now, the last 5 years, I think you guys know what's happened in the last 5 years. We had a global pandemic. We thought that everyone, depending on your beliefs here, maybe you thought everyone was going to get sick and die, or maybe you thought that nothing was wrong. But in either case, the government did shut down a lot of the economy, and it did cause a big crash. So we can see that here in 2020. That's when it happened there, that crash there, COVID-19. That year was up. I know it seemed like it wasn't, but it was. That year the market was up. The economy was closed down, but the market was up. And then in 2022, we did have another bear market there where the market did go down. There was a lot of fears regarding inflation. Interest rates were going up. Russia invaded Ukraine. And in 2023, we had Israel and Hamas start fighting each other. So there was a lot of things to worry about. 2023, there was also a few banks. Silicon Valley Bank went under. We thought that was going to trigger another 2008 financial crisis again. It didn't. And that brings us to now, to today. We're in 2025. The market's up. The point I'm trying to make here, guys, is that we don't know what the next 10, 20, 30 years are going to bring. But what we can bet on is that there's going to be a lot of volatility along the way. And if you just stay invested, if you stay the course, maybe your ride will look like this, but you will eventually make money in the stock market if you stay invested in a well-diversified portfolio. You guys, let me know if that was valuable, if you'd like me to speak on some more subjects, or if you have any questions about the market you'd like me to answer in a video like this, please let me know in the comments down below. Don't forget to hit like, subscribe, and we'll see you in the next one. Take care.